Hi, my name is Todd Bigelow. Thanks for stopping in. This is just a short informal video series on business topics for freelance photographers. I've been a freelancer for 30 years. I'm a contributing photographer to Contact Press Images. I'm an adjunct professor of photography and photojournalism, the founder of the Business of Photography Workshop, and most recently, the author of the Freelance Photographer's Guide to Success Business Essentials. Thanks for stopping in, and I hope you enjoy the series. Hey everybody, thanks for stopping in. Let's jump into it. Real quickly, this is probably going to be on the shorter side because I just want to address just a few things that are pretty pertinent for tax season right now. I know I've done a few videos related to how to handle your expenses this time of year, how to handle your tax returns. But I want to touch on just a couple of points that are really key for me each and every year to make sure I don't make these mistakes. So kind of avoid these three mistakes, if you want to call them, or three oversights might be more accurate. Number one, by now you should have all of your 1099s from your clients. If you don't have them and you're expecting them, definitely reach out to them and make sure that they have gone ahead and sent them as is required. Technically, they have to deliver them or send them by January 31st. I'm sorry. They don't have to be delivered by the 31st, but they typically need to send them by January 31st, which means by now, the third week of February, you should have received your 1099s. Having said that, the first mistake I kind of want to have you guys avoid is only claiming your 1099s. Now, what do I mean by that? So if you only claim the income listed on your 1099s, I'm not saying you're going to get audited by only using that exact 1099 number. So you get your 1099s, you add them all up, it adds up to $50,000, $60,000, $70,000, whatever and change. And you only claim that number. In all likelihood, that's not accurate. So I'm advising that you be as accurate as possible. Okay, so in the off chance that you do get an audit, you're able to support any and all income and documentation. So do I claim only 1099 money? No, it's almost always more than my 1099s because again, by law, a 1099 only needs to be issued by a client that pays you more than $600 a year. Okay, so I write quite a few licenses that are $200, $300, $400, anything under $500 or $600 for that matter. I do jobs all the time that are quick little portrait shoots for a few $100s, one-off clients through my Southern California Portraits.com business or elsewhere. But not every client that I shoot for is going to issue me a 1099, especially again, if it's under $600, a one-off quick shoot for a social media profile or something. You get $300 or $400 and you forget about it, right? You're not going to get a 1099. So if you're tracking your income as you should, using whatever you want to use, QuickBooks. I use PhotoBiz and I download that into my software that I use to do my taxes. I just go in and I select the year and I print out everything or, save everything that is related to my income. And oftentimes there is income in there that is not being sent to me as a 1099. Again, it's make sure you're claiming all 1099 money because that's the money that the government is being told you have been paid by one of your clients. Okay, so you don't want to, not represent that money on your tax return. However, I do, to make this point perfectly clear, I do claim all the income that I'm paid, and quite a bit of that is, a few hundred here, a few hundred there, and I add that on to my income that I am calculating and that I'm reporting on my income tax return, and I let my accountant know that my 1099 money, as it was this year, is not the only money that's being reported on my taxes. Okay, so second thing related to that, particularly with royalties. So any licensing income that you get, which I do, if it comes from clients that you also shoot for, they're going to send you one 1099. And that 1099 is going to include all of the income. Okay. Most of the time, and this goes back many years, they just throw it in non-employee compensation box on your 1099. But you need to break out any income that is only licensing income because it is not subject to what we call the self-employment tax. Self-employment tax, as a self-employed individual, you're paying basically all of the Social Security and Medicare tax. Usually that's paid half by an employer. So if you're an employee someplace, your employer pays for half of your Social Security and Medicare, you pay for half of it. Okay, as a self-employed, you pay the whole amount. That's generally what we refer to as a self-employment tax. Loyalty, licensing or royalty income is not subject to that tax because there's no services that you're rendering for that income. Okay, so because it's just a reuse and you're just granting rights to it and you're not actually providing any services to that client, it's not subject to the full scope of your general income tax, so to speak, or tax for your general income, which is generally services. So when you go out and do a shoot, you're providing services. Okay, so you want to make sure you track your licensing income, any royalty income, and separate that from any income that's reported on your 1099. Okay, so let's just take a roundabout figure. You get a 1099 for $5,000 from a client, and let's say $3,000 of that was services. They hired you to go shoot, and then $2,000 of it was for extra use. Okay. Or $4,000 was for services and $1,000 was for extra use or licensing. You want to make sure you're aware of that. You break that number out and you provide it to your accountant because they're going to take that number and they're going to take it out of your Schedule C where you're reporting all of your income and everything, profit and loss from business, any place where your income is being reported, they're going to take that money and they're going to transfer it to a Schedule E, which is where you report your royalty income. Okay? Don't pay taxes where you don't have to. Pay your taxes, do things as you're supposed to do, but don't pay taxes if you don't have to. And licensing income is royalty income. There's a specific form for that and a specific way to report that. So that's the second thing I want to make sure that you're aware of when you're doing your taxes. You have to keep track of what is service income or general income and what is royalty and licensing income. Break them out if they're not being broken out for you, which most of the time on a 1099, they're not being broken out for you. Okay. Last but not least, since we're coming, hopefully to an end of the pandemic or coming out of the most serious times of the pandemic, most of us in 2020 and definitely in 2021 as well, had impacts on our businesses. I lost a couple of my workshops due to COVID restrictions, people not traveling, all those types of things, okay? Depending on where you live. So this is, if you're in California, pay particular attention, but this is probably the case in most states, if not counties and cities as well. California offered a relief grant to those small businesses that were affected by the COVID pandemic. I did apply and receive a $5,000 COVID relief grant to offset some of the impact that COVID had on my business. Again, particularly with workshops. Okay, my regular assignment work, I would say it was impacted a little bit, but not tremendously. Okay, but definitely my workshop. So I applied for that grant, had to jump through some hoops, received it. That grant money is taxable money by the IRS. So the federal taxes have to be paid on that $5,000 for the California COVID relief grant. However, it is not taxable by the state of California. So why do I need to point that out? Because oftentimes this comes straight from my accountant because we just talked about this when I provided him everything. oftentimes the same number for your federal tax return is applied to your state return. That's mostly the case, okay? In this case, it's not, because we wanted to make sure we deducted that $5,000 out of my state return because it's not required that I pay taxes on it. Okay, so my Fed return has one number, my tax return actually has a different number for my income. Okay, so if you did receive any grant money last year, talk to your accountant, depending on where you live. But I can tell you exactly what my accountant told me, and with my own research, it's clear that COVID relief grant for small businesses, of which I did receive $5,000, is not taxable by the state of California, but it is taxable by the Internal Revenue Service. So make sure it's reported properly on your tax return. Okay, so 3 things. 1, avoid claiming only your 1099 income, because in all likelihood you are getting more than just 1099 income. So you should report all of your income. Okay. Number 2, know how to strip out the royalties from your regular income and move them over to Schedule E. Check with your accountant. Don't pay taxes where you don't have to pay taxes. You do have to pay taxes on royalties, but you don't have to pay the full scope of the taxes as you would for assignment income. And last but not least, summarizing, of course, any grant money, make sure you talk to your accountant, depending on where you live, on how that money is taxable. Again, the COVID relief grant is taxable here. Taxable in by the feds, by the Internal Revenue Service, but it is not taxable income here in California. Okay, just a few things to keep in mind, as most of you are probably getting ready to or are finishing up doing your taxes. So hopefully some of that, maybe helps a little bit in your final preparations. Okay. Thanks so much. I cover a fair amount of this in my workshop as well as my book. Information follows on these videos, and I hope to see you again soon. Thanks.